Good morning, guys. From one retail investor to another. This is Trader72. Welcome back to my YouTube channel. The third upload this week. It's been a busy old week for me, but we are back, and we're back as promised based on last night's results, the trading update, the four heavyweights, plus the two credit card kings or ratings even of Visa and SPGI, and of course the big four, Microsoft, Amazon, Meta and Google. And who came on top? It was one hell of a night, one of a kind really. It's been a rarity since we've had all four announcing on the same day. So these are, obviously not just earnings. They're effectively a signal of the consumer, the enterprise spending, and also signals of how the economy is doing, and of course the amount of spending done by these boys. So today is really an earnings verdict on what's happened. I'm going to keep it simple. This is the whole point of the Trader72. I'm not going to go into a major jargon of details. The details are there for you guys to see in black and white. I try to simplify it, and that's the whole point of my channel, especially for retail investors that have just come into the game, or people that have been a little bit around that want a little bit more, a listen to what's been happening. I know that I like to keep it simple when I listen to some of the people, some of the other YouTubers that I listen to. So without further ado, let's start with the earnings verdict. Let's start with Microsoft, guys. So it was a pretty damn good numbers there. Let's have a quick look. Revenue was expected at 82, came in 82.5, so just, a good beat. EPS came at 322 versus 294. So it kind of, it continued its investment in infrastructure. Azure Copilot monetization remain a key growth driver. Expect cloud demand to continue. And of course, CapEx expected to remain elevated. So, it was a good beat. Net income was up 21% year on year. Azure growth, which is obviously the key number that most people were looking for, is up 34%, so not bad there. Operating margin up 2 points year on year, so that's pretty good as well. Strong iCloud AI demand, solid revenues obviously beat. Azure growth accelerating, strong balance sheet. So that's on the good side. Still heavy AI CapEx spending. Guidance seen as solid but not amazing, and I wouldn't out of the four, I don't think it was, it didn't exactly pop, and we'll probably see that from the after hours market share of the share price at this moment. Market guidance seen as solid but not a blowout, and markets wanted a little bit more of an upside. Still not bad numbers, delivered a solid takeaway really from Microsoft. And on the back end of that, I think the share price is actually slightly down in pre-market, the latest from this morning, about 3 or 4% down. So wasn't amazing, but it still was fairly steady for Microsoft. And I feel that it could be, not as bad as last time. I think the share price won't be dipping as much as last time. But I think the still big takeaway from Microsoft is the amount they're spending on the AI CapEx and expenditure of the data centers. So something to look out for. But let's see what happens. Onwards and forwards. Meta. Now, Meta, probably the worst of the four in terms of results last night. Not due to the numbers. As you'll see, the numbers are again a well beat, 56 versus 55. EPS 1044 versus 670. So again, very strong, comfortable beat on the numbers. That's not really the issue. I think the slight issue that we had going forward in the forward guidance, which is what I said in the last video I did, was forward guidance will be key to all the movements of the share price, especially post results. I think the CapEx further raised the CapEx, and I think the other little bit of an issue is the slight user growth slowdown, and I would say slight. So maybe something you guys need to have a look at more in details. But I think that had a little bit of a dampen on the actual share price. Like I said, EPS was super strong, AI monetization improving, engagement remains strong, and I think it's the 15th straight revenue beat, which, to be fair, most of those the big boys tend to do. Looking at the key financials briefly, 35% year on year up on net income, Daily active people about 6%, which is possibly a little bit higher, expected a bit higher. Operating margin still up 6 points year on year at 38%. And the Reality Labs revenue, which is slightly down by 9%. Despite a strong beat, investors are concerned, 6.3% down in after hours, and I think actually it has fallen through now nearly at 610 from its yesterday's initial share price at about 674. So quite a big drop. Not a major blowout. Again, I would say that, if I had a company that had those numbers, I'd be pretty damn happy. But of course, the expectations by the market are so damn high that obviously any slight question mark on growth or revenue or growth or user growth or even capex expenditure is having an effect, and we're certainly seeing that, especially in the last 6 months, every time those guys are announcing numbers. So moving on to the next one. Amazon. Now, Amazon, again, good set numbers, beat across the board, 181 to 177, EPS 278 versus 162. So again, a given there by those guys. Beat EPS driven by strong AWS and advertising gains on Anthropic investments. So again, net income is up 64% year on year, which is staggering, really. 17.1 billion. AWS revenue at 29.3 billion. Again, 17% year on year. Really staggering numbers still, considering, every quarter they're announcing 4 times a year. Operating margins are up 3.2. Advertising revenue, more importantly, is up by 19% year on year, which is quite, again, that does help with the numbers. So Q2 revenue guidance above expectations, so again, pretty damn good. Continued investment in AI infrastructure, which is having an effect, I think, slightly on, and that's probably one of the key points, the key takeaways from Amazon's result, on the free cash flow, which we all know free cash flow is the king of the lifeblood of the company, the king of the kings of the numbers that you tend to look at if you're investing, and it's certainly putting pressure on their free cash flow with that amount of expenditure. Focus on long-term growth, customer service, profitability headwinds expected near term, so that could have a little bit of a dampener there. Again, massive capex expenditure, $43 billion in this quarter alone. That's plus 90% year on year. So, it is, like I said, putting pressure on the free cash flow, 25 billion down on year. So they're really putting all their eggs in one basket, I think, in terms of the expenditure. Now, if it comes off, they will be making even more trucks loads of money. But if it doesn't quite work out, it could be fairly well punished by the market in the long run. So I would say a pretty big gamble, really, considering. But, with the amount they have under one roof in terms of businesses, they could probably bounce back eventually. But still, to look out for. There's also a massive gain from the Anthropic investment, which I think has boosted the share price. And of course, this tool macro uncertainty remains, with oil prices being very up, inflation being up in the States and globally at the moment, could affect, I suppose, consumer spending, which obviously Amazon tend to rely on. So let's see what comes out of that. I think the numbers are pretty good. The initial after hours was 5%. It has shrank down since. I think it's up about 1.5%. We can have a quick look at the charts at the end, towards the end, when we finish the actual analysis. But again, strong quarter, big across the board. However, massive AI infrastructure spending is still putting pressure on all the stocks. Still, the share price is at 264, which is pretty good. I think it's actually the highest it's been in almost 2 years. And I think the last I looked, it was around 264 and slightly down in pre-market. So let's see what comes out of that. Onwards and forwards to the next one. Alphabet, the last of the big four. So again, Alphabet was the one that probably did the best. If we're going to ranking them as the number 1 to number 4, Alphabet came number 1 with their result. Absolutely phenomenal. Smashed it out of the park. And I know a lot of people use those expressions, so pardon if I used it, but it really was a smash. Revenue expected at 107, came in at 109, 2 billion extra. I mean, That is outstanding. EPS came in at 281, again smashed the EPS from expected 263 to 281. Strong cloud, AI performance drives another quarter beat, and that is what it is. Net income 46%, I repeat 46% year on year at 30.7 billion from Google. Google cloud revenue came in at 63% to 12.3 billion. Operating margin at 4 points up year on year, which is again staggering. YouTube's ads and revenue came in at 10% year on year at 8.9 billion. AI investments continuing, cloud growth expected to remain strong, focus on efficiency. Again, and obviously spending is over there, but in terms of good versus bad, revenues up, obviously smash. Google Cloud at 63% year on year is really staggering number there to highlight. And AI delivering strong ROI, obviously return on investment, and cost of discipline improving margin. Now, on the bad, CapEx increasing through obviously controlled, probably a little bit more controlled than the rest. Obviously very dependent on advertising, still a core risk, and regulatory scrutiny, which, let's be honest, is not really, it goes across all of them. So incredibly strong performance, massive margin expansion, showing that AI investments are driving real results. So that is where I think, in terms of reality of their expenditure, it really is monetizing AI. And I think Google is probably the main example of that so far out of the big four. That's announced their latest results. So up 4% after hours. I think it's actually up nearly 5 to 6% now. So definitely the winner of this last night's trading updates for Q1. And I think extremely impressive. No doubt about it, guys. Moving on to Visa and S&P Global, which was previous night before. I did feature them in my last YouTube upload, so I will obviously go through them. Probably the winner of the financial side so far at the moment is Visa, which I owned as a stock and actually did very well out of it. Thank you very much. I sold it on the back end of the results. Profit is profit at the end of the day. I'm looking at long-term value, but my strategy at the moment is slightly shifting towards more of a mid-term, short to mid-term at the moment, buying at, at a good price, in terms of intrinsic price, which I've mentioned many of times in my upload videos. Probably you guys are sick and tired of hearing it, but it is important. And at the moment, I bought Visa at 311, sold it at 330 on the back end of the results. So as you can tell, a slightly, a good result and a good bit of profit. So I just felt that going forward, it was probably best to kind of look at something a little bit more, less defensive as Visa is, and a little bit more aggressive in terms of moving price. It is quite a slow compounder. Great to have on your portfolio, but the numbers are phenomenal. Came in at 9.75 billion, above the expectation of 9.55 revenue. EPS smashed from 276 to 268. The key point on the Visa results, though, is the forward guidance, which was very impressive. They raised full-year revenue and EPS guidance, which is always a key point, and I think always goes down well with the markets. Strong consumer spending still, so that looks like at the moment, so far, consumer spending in the States or globally hasn't quite been hit yet, although that may well change. And one of the reasons possibly I sold Visa quite early is I feel like with the next quarter, with the obviously inflation and the situation in the US and Iran, could start affecting consumerism. It's starting to happen here in the UK, and I'm pretty sure that it will, with the amount of pressure from oil prices going up, that on top of the already current inflation, I think that will effectively be something that you guys need to have a look at. Now, I've got no financial background, just bear that in mind, guys, but do your research on anything financial or consumer led, because people, I think, will stop spending pretty much in the next quarter or two. It always has a lag based on, obviously, commodities such as oil pressures. So just bear that in mind, guys. So yeah, Visa, anyway, great consumer. Cross-border momentum continues, which is obviously a key point. Raised full-year guidance again. So as soon as that happened, the share price popped. I think it's at 336 now. I could have probably stuck with it a bit longer if I'm honest. But hey, if I had the beauty of hindsight, I would be a multi-millionaire. But no, as I keep saying. So slightly down in terms of cross-border growth. Macro uncertainties is going to obviously be a problem, but great numbers, and hence why. Obviously, the other key interesting point about Visa, the continued investment in fintech, and obviously the future of AI, and also a massive, by the way, share buyback, which obviously is always a key moment in terms of the buying at a cheap price, which is what Visa is at the moment, in terms of where they are on their 52-week high. So I think that's a very clever thing by the management to obviously do a buyback of shares, which I think is always key, but quite a substantial one there. S&P Global did not pop as much as Visa. Again, another company I really like and I would love to invest back in. I'm waiting to see if the price might fall back further towards more my MOS, my margin of safety, which is 25%. It's currently around 22%, so still cheap, but I still would prefer to wait for it to fall further down in terms of share price. But again, good numbers all across, beat on both sides, EPS and revenue. As you can see there, 355 to 362, 360 to 377. Revenue's up, net income's up. I mean, exposure to macro slowdown and market volatility, and obviously deals in terms of, obviously that lives on credit rating, and deals going on for insurance for companies could be affected by the slow growth. So that, I think, is something to look out for S&P Global, and still attach this madness of the SaaS apocalypse, and the fact that potentially AI will replace some of the services that S&P Global offer, I think is utter madness, considering that they're integrating AI within S&P. So something that I've mentioned quite a few times is ridiculous, and I think S&P Global is a quality compounder. Both these guys are. So definitely, you guys, I know this is a bit boring and not as exciting as tech, but definitely if you had a portfolio of a few companies, those two would be, I think, should be considered, especially at the price they're at the moment. Numbers come out pretty well out of it, really, in terms of beats and numbers. Forward guidance was in general pretty good, bar really Meta, I think, in terms of slow growth. Still a massive AI spending is still a key issue. But let's have a quick look at what was said on the back end of the results.
Here, are we looking at a good thing or a bad thing right now when it comes to these four major hyperscalers?
It's a good thing, and the difference in stock reactions really just has to do with how high the expectations were. It looks like in the three critical data center businesses, the hyperscaler businesses exceeded expectations. They're all still accelerating. AWS, Microsoft Azure, Google Cloud, accelerating, still growing faster and faster, and that's a very good sign in terms of the progress of AI. That's a key takeaway. The stocks are reacting differently because expectations from AWS were for even higher, and for Microsoft, investors were a little more skeptical. But both look good, as does Google Cloud. From an initial look, it looks like advertising for Google and Meta is also strong. That has to do with the broader strength of the economy. Amazon, the retail side, looked good. Has to do with the broader strength of the economy. So I'd say, yeah, overall, first look is a positive look from all these companies.
So there you go, guys. So quite a impressive. Clearly, the experts are also impressed in the results. So let's have a quick look for you guys in terms of where the stocks are at the moment. Pre-market, as you can see, Microsoft is down by 1.74, so down to 417. It's definitely taken a slight dip. Let's have a look at Meta. Meta is down by 8%. So again, quite a hefty amount there. We keep losing, sorry, apologies. Down to $610 a share from $669 yesterday. Alphabet, let's have a look at Alphabet. We go. Alphabet currently up 21 points, so 6.30%. Across the board. So again, quite impressive. Let's have a look at the year chart there to give you guys a little bit more of a, so you can see, I mean, what a rise there by Alphabet, and definitely the winner of yesterday's earnings for sure. Finished off with Amazon. I think at the moment Amazon are in pre-market up actually at 2.34. So really, the only one losing out really is Meta at the moment, as it stands, in terms of the post-market pop or not. So it seems, I think Microsoft and Meta obviously slightly down, and the other two up. So really a 50-50 there in that basis. Visa at the moment at 332. I think it's slightly pushed back, and SPGI I think slightly down, just under 430. So there you go, guys. That's the earnings report. That was one hell of a night. It all came at once. I think I spent most of last night on my phone while chilling out, trying to watch TV, and then suddenly these numbers all came out once. I had to digest a lot of it, and it certainly has been an interesting evening. Now, it'd be interesting to see what the markets do on the back end of this. Let's have a quick look at the markets first. Right, here we go. So the markets are, NASDAQ is up nearly 1%, so clearly going down well with Amazon, obviously, and I think Google, which are two big key drivers. US 30 is pretty good at 160 points up, as you can tell. So, yeah, I mean, pretty good. I mean, crude oil, obviously, $116 a barrel. It's actually nearly at 119 this morning. It did retreat slightly, thankfully, because as you guys know, I've got a position short on crude oil. I believe that eventually the prices will come down. When? That is a good question. There seems to be a bit of a stalemate at the moment, but again, we'll come to that for another time. So there you go. So I think the markets will react quite well based on that this afternoon. I've actually quickly bought onto Netflix on the dip at the moment at 91.92, just as a bit of news. Sold Visa, as you guys are aware. I'm doing a little bit more strategies, looking at a bit more short term at the moment. But I will be looking at going back into a value investing strategy very shortly. And in terms of looking at maybe one or two companies long term. There are some good bargains out there. ServiceNow, I'm looking at, as you can see, S&P Global. Uber still struggling to get anything above north of 76. So again, there's some opportunities there. Potentially Meta at the moment on the back foot, maybe on the dip. But lots of opportunities there for you guys to have a look at. As I said, I'm not a financial advisor. Please do not just, please do your own due diligence. I'm only here as an advisory person, really, pretty much. Any comments below would be greatly appreciated, guys. I'm still not getting enough comments. Always happy to listen to what you guys have got to say if you agree or disagree with me. And I had got a good response from the ServiceNow, so thank you guys for viewing and clicking. Please do continue. And for this third upload, busy week, I may even squeeze one more analysis. I'm working on one at the moment, so hopefully you guys will be checking that out. Please subscribe and like. This is one retail investor to another. Trader 72 over and out. See you soon, guys. Long night indeed. We all need a rest after this week.